times to avoid confusion, because what people tend to do immediately after they join me, after they learn the footprint and implement it, eventually in a way, like some, I don't know if you guys get bored or you just become too comfortable, but they end up like mixing a lot of strategies at the same time and creating what we call a cycle of doom. They find themselves in situations where they get highly confused of whatever is actually happening inside the market, because there's just too many things in their mind. So they don't have a single way of viewing the market of trading, if I can put it that way. So here, what I'm going to start by doing is drawing the structure that we normally draw, and I'm going to illustrate the kinds of lines that we must take into consideration. So wait for the market to create a pattern like that so that we can be able to draw our first line, which is the footprint line. And after it, the first layer line. So I'm going to draw some type out names. That one is just the first. So the red line, it is the footprint line, and normally this line, it is the one that shows us the slope of the market. It is the one that shows us the slope of the market. And now the first layer line, it is the one that distinguishes whether the market, it will still go into the direction it was going, or the market, it is about to go into the opposite direction. So now the two circles that I just drawn in here, it is to illustrate that it distinguishes whatever is happening before the market breaks the first layer and after, meaning you get to determine, or you get to have a fine line where you can be able to know what kind of a decision you must be making from there. So our first layer line, it is the most important line. Why is it the most important line? It is because it is the one that is actually telling us if the market it is facing the opposite direction. And here we just simply know that when the market decides to break that first layer line. Because when it breaks the first layer line, it means that the momentum, it is still, it is not as high as it was, because of if the momentum of this trade was high, it would have continued going up. So for some reason, it didn't go up, and now we start to focus on the opposite direction of this trade. So we just simply wait for the breakout to happen. So happen. After the pullback happens, we want the first point to be higher than the second point. Why do we prefer that? So that we can be able to draw a footprint like this, but in the opposite direction. Now, from there, after we're able to see that, okay, the market has broken the first layer line and it is about to make a retest, what we then look for there, it is divergence. And divergence, we only use divergence for execution purposes. And we also use it for making re-entries, for executing re-entries. But you must be very careful in terms of, let's say, for example, I'm entering a trade of a sell on 1 hour. 1 hour have its own divergences. 30 minutes have its own divergences. 5 minutes also have its own divergences. So now, the difference in all those kinds of different time frame divergences is that the lower time frame divergences, they happen very much early. And when they happen very much early, they still send a message to the bigger time frames. Why? Because of before a bigger time frame happens, there must be a small time frame that happens. We know that. So if you find a divergence on a lower time or on lower time frames, and there's high momentum, that will be very much helpful because of you get to be exposed to opportunities where you can make a lot of re-entries than when you're on 1 hour or 30 minutes or on a bigger or where you actually make a fixed execution. So you guys must also pay attention to that. The kind of time frames, you must understand how the time frames work, and also with in relative to the stochastic. You'll find that sometimes on 5 minutes, you find a sell divergence, a very sell divergence where the market has touched the overbought, meaning the stochastic has touched the overbought. And from there, you just have to wait for the crossing over. But immediately when you go to 15 minutes, you'll find that the market, the stochastic, it hasn't supported a sell. So immediately after some time, the time between the crossing over of the 5 minute time frame and the crossing over of 15 minute time frame, you will see the market sometimes it consolidates. You will see you won't be able to get a full. Some actually won't be able to get a full understanding of what will be happening at that time. But in terms of time frame, in order to satisfy yourself or just for extra confirmation, you can just wait for 30 minutes to cross over. That way it is very much better because of you will get to even understand more in terms of time frames, how they work. Because of I find a lot of questions of people say, okay, I've implemented the footprint very well. I drew the footprint line, I drew the first layer line, the market broke, but I'm not seeing any divergence where the market has the overbought. So now that way, you're going to a lower time frame. Like I've said, a divergence on your time frame, it will happen. But if you feel like it is taking too long for it to happen, simply go to a lower time frame. You'll get what you're looking for. And with the current time frame you are in, you will just simply confirm with what we call the crossover. So those who don't know what the crossover is, in the stochastic, there's two lines. Let me show. So you guys can see the purple line and after the line, so see the purple. Okay, give me a second. I want to mute extra audios. So the purple line, and after that there's an orange line. So the crossing over between them here. We're looking for this crossover actually here, because it is normally at the overbought. So overbought, it is from here going up. Oversold, it is from here going down. So each and every trade that you take, you must take it in a divergence where the stochastic is at the overbought or oversold, depending, obviously, like with any time frame that you'll be in, because of, like I said, each and every time frame have its own divergences. So another thing, it is very important to see that this blue line, it is the one that normally crosses the orange line. Doesn't matter if the stochastic, it is going to the upside or it is going to the downside. So now, the main simple procedure is that from where I've ended, you're gonna spot a divergence between the 2 points and take a sell there. And immediately after you take a sell there, you let the market move into your direction. Like, do not be in a rush to do anything. Let the market form on its own as long as you've entered your trade. And eventually at some point the market will make some retests, depending of course on the time frame and how big the retests are, of course. So, but when those retests happen, you are allowed to enter more positions using the same divergence, even on a smaller time frame anyway, as long as you've added more trades. You use the same divergence to add more trades. And make sure you get to a point where you're starting to see the structure. You're starting to see the structure, meaning when I say you're starting to see the structure, is that you're starting to see the footprint. You're starting to see the first layer. The reason why you should see them, it is because of, if you didn't know, we use, like our way of taking profit, it is very much different to how people normally take profit in the market. because of us, what we prioritize, as I'm saying to you that, okay, the first layer line, it is the most important line. And each and every time the market breaks that first layer line, it goes into the opposite direction. So now ask yourself, if you are on a trade of a buy and the first layer line, it is being crossed. It is being crossed. Now that means you'll have to close the buy trades that you took. Because if I just told you that, okay, why should you keep on holding the trades that you know that, okay, if the market, if the market breaks the first layer line, you're about to take it into the opposite direction. The market is about to go into the opposite direction. So there's really no need for you to keep on holding on those trades. So simply, we wait for the first layer line to be broken, and that is a determination for us to actually pull out of any trade and start looking at the opposite direction for another trade. So after you're able to find a full structure, draw your lines. Then after that, you draw your first layer. Then now it will just be the matter of waiting for the market to come and break that first layer. Just wait for it to come and break that first layer. And immediately that first layer gets broken, all the sell trades that you took using the divergence, you leave them. There's no need for you to keep them holding on to them. You simply leave them. After you leave them, you start focusing on the opposite direction. You wait for a pullback. After the pullback happens, you enter your buy using your same divergence. And then the market will go into your direction just like that. And after that, again, you do the same thing. And then from there, you do the same thing. If the market gives you some more retracement, you simply ride with them until the market decides to hint us that it's about to go into They're opposite directions. Then from there, you get into another opportunity. So this perspective also helps with if you're focusing on one pair, you'll be knowing where the market on that pair comes from, because you'll be following it and you've been taking advantage of. So each and every movement that have been happening with regards to that pair. Okay. But nonetheless, you can apply the strategy everywhere, like I've said. So what I want to do now is show what I've shown you, like on the diagram, practically on a chart. No? So I'm gonna, let me see. Let me start with your with regards to this, I can be able to draw a footprint there. I can be able to draw a first layer there. The step is very simple. When the market opens, you wait for the pullback and be able to draw a footprint. A divergence. If you are able to buy there, I know I'll put my stop loss around there. Why do I put my stop loss around there? Because we're normally looking for a structure like this, so that at the end of the day, we can be able to draw a first layer. So now if we put our stop loss here, and the market goes and hits it, we'll have this structure. We won't have the structure we need, which is this one. Make sense? Now, after you enter buy there, you will, as the market continues, you'll be able to make re-entries there.
Please try.
Yes, are you saying something? Hello?
I was saying, can we please check gold?
Gold, we'll check it now. We last bought it last week, so I'll just check it now.
Yeah.
But I want to give my perspective of whatever I'm seeing here. So before the market closed, this trade was very straightforward. Could have taken a buy, which will give some money by now. Yeah, it was going to give some money, definitely. Because if I'm comparing the points here, between there and there, and there, we'll enter your buy there. Now already in profit, okay? So if anything happens, simply draw your footprint line. If the market even is stubborn to a point where it even breaks the first footprint line, then it's time to go into the opposite direction. You got the hint already, so there's no more that you need to know. So you have to continue taking into the opposite direction. So gold, okay, this a clear formation of a structure here. Let me see. Drawing. Okay. So on this line, the first layer has already been broken. Has it? Yeah, it has. So waiting for that pullback and make a retest. You know, when we enter a buyer there, we put our stop loss at the end of there so that we can take this thing up. But if the market decides, if it goes up and decides to even come and break even the footprint line of that particular setup, then we listen to the market and take that thing to the opposite direction. So that's what will happen on gold. I want us to take a look at something that we can also execute immediately when the market opens. And I don't want it to be, no man, but oh yeah. So I'm seeing something here. Yeah. So I want you guys to see something. So when the market opens, we can buy this thing. The reason why I'm saying we can buy it. Let me check. Let me confirm something. Okay. So I think we should wait. Why are we waiting? We're waiting for the breakout of that. But so far, it has to go up. The reason why I'm saying that is because of I'm seeing divergence already, and I'm seeing the things already. If you can compare these 2 points, you will see that okay, it is buying. And if you can go and confirm with your 15-minute, you will see a crossing over that I was talking about earlier. So you can see the purple line or the blue line, the orange line. So we can expect a good buy. Then after that, immediately after the breaking of the first layer, we just continue adding more trades, not adding actually, placing the first trade because here the first layer has not been broken, and I don't want us to be in a situation where you find that when you check on 30 minutes, it's a sell divergence. But look, so definitely a sell divergence. So when it gets to this point, it freaks out a lot of people, and people like it plays. It's like a mind game, some kind of a mind game. But that's why the footprint was implemented. We cannot do anything in this stage because of we put a barrier here. So we only waited for that. We only wait for that barrier to be broken, so that we know the full perspective if the market should go up or down. And when it goes up, we'll be able to extend the footprint line from there and be able to know when it will be starting to go down. So we'll be knowing like the full activity of what will transpire in the trade. So again, it's just a matter of waiting. You have to wait there. There's nothing we can do. And please don't make a mistake of entering where you should not be entering. If you enter a trade and you have not spotted a first layer, or like you're entering recklessly because of what are you entering based on? So you must enter based on the steps that you are given. Do not enter based like because of you are feeling happy or whatever. So let's check for more. Okay. Five minutes, I'm supposed to see a proper structure. Perfect. 5 minutes, I'm seeing a footprint line. I'm seeing a first layer line. Oh my God. So yeah, you guys can see from there on what we're waiting for. So it is very much clear. It is very much clear. So yeah, guys. Let's meet up tomorrow. Zoom, one-on-one Zoom meetings from tomorrow when I get to the office. Last week I managed to do a couple of Zoom meetings. So tomorrow morning we're continuing. Make sure I sort out all of you and make sure I have enough time for all of you so that we can get to a point where you fully understand